Alright, so it appears the higher low did not hold, meaning that CVD I had talked about in last video, where a short squeeze was more likely, is now invalidated. But does that necessarily mean to panic sell right now? Hopefully you didn't panic sell the lows, because during these big sell-offs we do see big retracements even in the worst case scenarios. So I want to go ahead and start off with where we could see that retrace in a worst case scenario, and then some things on the charts that are actually leaning me towards being more bullish and optimistic right now. Some reasonings to why we actually had this dump in the first place. Japan is collapsing, so there's a lot of FUD around that. Unemployment rate is kind of skyrocketing here in the US, but I do think, let's give it some time. We have new unemployment data coming out in just 3 days, so depending on what those numbers show us, if we can turn down here, if we can show that that last data point in unemployment was just a kind of spike out of the norm, and then we do reverse back to the mean when it comes to that, I do think markets are going to recover pretty violently here, and this could just be a big shakeout. But of course, at this point, we have deviated all previous cycles for a bullish scenario, especially on the altcoin market. Let's go ahead and look at the total 3. This is a big wick that needed to get held. We have now invalidated that. So does this mean we're entering the bear market? Well, I will go ahead and say a lot of stuff is already in the bear market. If you look at others, this thing is getting down to bear market lows at this point. We're back down here at the highs of 2022. A lot of altcoins are back into the bear market. So while we have now deviated bull run structures, especially when it comes to the altcoin market, we are getting to big supportive levels. So speaking of retraces or even potential large rallies to make all-time highs, I mean, this is just not the time to panic sell, because there are multiple scenarios on what could play out here. History doesn't repeat, it rhymes, and sometimes it just does stuff that it's never done before, because Bitcoin has never seen monetary policy that we're in right now. Bitcoin has never seen a recession or depression before. It was created after 2008, so it's very uncharted territory on what crypto will do. Even if we do enter a recession, could it decorrelate and follow gold? That's yet to be seen. So at this point, we're gonna ignore kind of fractals from back in this area, because I don't think this cycle is similar to 2020. It's not similar to 2017. Once again, we're in uncharted territory, so let's just go based off the local time frame TA, talk about some of these charts. We're not going to start off with altcoins though. Let's go back to Bitcoin, and where I was actually on CME, because we have this big CME gap to the upside. So what does this tell us? Well, it tells us that price is likely to come back up and test this, at least partially fill it, before rolling back over or continuing on to the upside. These CME gaps usually get filled around 95% of the time. You can see we had this one to the downside, which could have been the warning for this dump, right? We had been talking about this on this uptrend. Honestly thought it wasn't going to get filled until we made an all-time high and then roll over, right? I've been thinking we were in distribution, but usually in distribution, you clean out the highs. We never saw that cleaning of the highs, and that's why I think it's still possible to do so. I'm not getting super bearish right now, panic selling the lows, because we have found very nice support. Swing fell in this, but we're not talking about the swing failure right now. Let's talk about this CME gap and where it is located. So as you can see, we have this white line coming across here, as well as the blue line under it. What is this? Well, this is the value area low of the range and the value area low of the 4-month volume profile. That quarterly volume profile can act as big support resistance flips, and it's coming in right in the middle of this CME gap. So if we are to partially fill it and reject off of this level, that's my target for a worst case scenario right now. That's what I kind of expect to happen no matter what. I posted this in my Discord, and as you can see right here, this is kind of my 2 cases. So either we come up here, partially fill the CME gap and roll over, or we go ahead and launch up through it, and then on a full fill of that CME gap, you would actually be back testing the golden pocket. So let's go back to the CME chart so you can see what I'm talking about. So basically, yes, I would expect, worst case scenario, we come up and grab that, right? Maybe it doesn't happen instantly, but eventually go up and grab that before rolling over. And then also, if we are able to fulfill it, what's interesting about this gap is we had talked about this swing low, swing high, golden pocket, and how, this first CME gap was coming in right at that level, and it made sense for a bullish correction to it. Well, now the secondary CME gap is actually above the golden pocket. So if we are to come up here and fulfill the CME gap, we are now going to be above a previous golden pocket. We're going to be above the value area low, and it is going to be likely at that point that we could go ahead and actually backtest this stuff into support, and we could continue on up here. So this is something that makes me really optimistic because of how high up this CME gap is. If we can have enough strength to actually get through the CME gap, if we can clear it, we are now going to have tons of support below us, and we could easily flip this back into support for that squeeze on up, and I do think it'll be more of a squeeze. I think on any potential moves up here, we're going to see a lot of shorts being open in the market, and the market could keep disrespecting those shorts and continue to squeeze them. So that's something we're going to be watching in the CVD and open interest as price continues to move up here. Are we seeing open interest going up? Are we seeing CVD going down? And are we seeing price go up? So if we see this, right, we see price start to come up, we see open interest start to come up, CVD starts to go down, that is going to indicate shorts are being trapped, they're likely to be squeezed, and if shorts keep adding to their positions and placing their stops back up at these highs, then it is very likely for price to hunt all the way up to all-time highs, squeeze out those shorts, and then finally roll over into the actual bear market. But that's not something we can predict. We got to take the data day by day. If we see a lot of longs continuing to open and price just kind of chops in here and makes lower highs, let's pretend this is open interest, this is CVD, and this is price. Well, probably just going to go ahead and roll over at that point. There's a chance we don't even fill the CME gap, right? There's a lot of possibilities on the charts. These get filled 95% of the times, but there's always that 5%. So keep it in mind. But so far, I like where the CME gap is. This is giving me a lot of optimism, and this is from Hopium for you guys, that we do have a big level that should be tested that is actually above support. So if we go ahead and grab the CME gap like we would expect to happen, then you got that chance to reclaim the range. And at that point, I do think it's a good possibility we flush out these highs, because we've been continuing to talk about these highs and how bad they were, and we just continue to build liquidity above $70,000, and it just would not make sense to not grab this. And with this dump, I actually prefer that we got below $50,000. I know a lot of people think that's extremely bearish that we went ahead and broke below 50K, but I much prefer this than if we had just done a little baby sweep, right? Because we had a ton of liquidity behind these lows as well. Now, this is something I had been talking about. If we go ahead and start dropping down here, well, that's bearish, because we need to grab this, right? This is where the liquidity is sitting. That's where we're going to hunt, and we already hunted that and found very nice support, and we're getting back up within the range. Have we accepted the range yet? No, we still need to flip this value area low into support. Until we do that, we could see this is like the worst case scenario, right? We could backtest the range as resistance, continue down depending on what happens globally in the world. I know there's a lot of geopolitical things going on right now, a lot of economic things going on worldwide that are signaling a recession, World War III. So once again, uncharted territory when it comes to that, but the charts are shaping up to be potentially very good with that flush that took out all of those long positions just on this liquidity basis. We have now gone ahead and grabbed the $50,000 liquidity, and it makes a lot of sense to go ahead and do a full rotation back up to the top side of this range. If we cannot do so, let's go to the 1 year time frame just so you can see what is to the downside. If we are not able to hold this, right, this should be our last line of support. If this is not your low, if we start going below $50,000, maybe a sweep of the sweep is possible. We'll look at some buy walls on Trading Light in just a second that show you that there are buyers potentially looking for something like that. But if we start closing candles back below $50,000 again, we're not only going to hunt this $40,000 region, we're not probably only going to find support in $30,000. We're probably going to go all the way below $25,000. And I do think, depending on what happens, once again, with world events going on right now, economic events, we could actually see much lower than people are calling for. I know a lot of people are saying Bitcoin will never go under $30,000. If we go ahead and enter a Great Depression, that is uncharted territory for Bitcoin. If it follows the stock market, we probably will see under $30,000. But once again, we have no idea how it's going to react as an asset class. For all we know, it could decorrelate from the stock market. But let's go ahead and jump into more shorter term time frame stuff. And what we see here is pretty cool, because we finally have whales stepping in to push price up. They are potentially looking for that sweep of the sweep, right? We have this big 1,000 Bitcoin buy wall right here with a bunch of staggered orders below. Are these spoof walls? Are these real orders in the order books? Impossible to know, right? But I would say this is very nice to see that we are seeing a lot of buying pressure. This is going to pump the price, since a lot of your algos, bots, a lot of resources do use these walls to identify order book pressure, and it is very bullish for price. Not only do we have those walls way down, but we also have a lot of other whales staggering up positions closer to price. We see them filling price. We see a lot of aggressive buying right now, which is good to see, and I would not be surprised if Bitcoin just flies up from here, but we do have to worry because we got a lot of sell walls as well, and these are at an advantageous point because they're within these single prints. So big inefficiencies in the chart appeared around $57,000. This could act as big resistance, and just be careful, you know, if these walls do get filled, that could be a point where Bitcoin rolls over. That 57K region is above, you know, this value area low within here, so it's right around this region. You know, in that worst case scenario, we could fill those walls and go on down from there. So we'll see how it reacts. Will these orders be removed from the order books? Are they just spoofs to try to fill more long positions? Potentially, right? I think structurally Bitcoin looks very, very good here. This is the sweep level of that $50,000 region from back here, right? So all of these wick lows are represented by this yellow dashed line in the chart. We had that liquidity sweep. I actually got in a long right here, had to stop at entry, got stopped out on the position, unfortunately, and have not gotten back into anything just because of the volatility on the chart. I'm probably going to let price do it at once. I don't care about getting pixel bottom on this. I'll let structure form, and I want to let the volatility go down because if I take my measure tool here, I mean, even if I'm taking it from the secondary sweep level, I mean, my risk on this is 7%. Bitcoin is just incredibly volatile right now. To be leveraging it, your risk to reward is pretty bad on days like this. I'm going to give it some time, let this ADR chill out because we see $1,100 spread on that average daily range. That is pretty bad for leveraging. So that's probably a reason we're not seeing a lot of longs opening up here, which is what you normally want to see, right? You want to see bullish continuation from longs, but we see positions closing, which usually indicates a weaker move to the upside, right? It means that shorts are closing. But like we said earlier, shorts can continue to add to their positions, and also this could be pushed up by spot volume because I'm sure there's a lot of spot volume right now, and I actually haven't looked at this. So let's go ahead and check this out together. The FD-USD pair is over here on the right now. This is the biggest volume spot pair in all of crypto, and let's see, are they buying or not? And they are currently not buying, but they're starting to buy, right? So we see from this low right here, we see actually a hidden div. They make lower lows on the CVD, higher lows on price, showing that they are being absorbed actually. So there's someone else buying. Let's check these other big spot volume pairs. How about just Bitcoin USDT on spot? Is this pair buying up price? And we do see, there we go. So the Bitcoin USDT pair on Binance, that spot pair, is actually accumulating pretty heavy right now, and this is probably where a lot of volume is coming from. How much volume? Well, let's jump in here to the charts and we can see it's a couple thousand Bitcoin, nothing too crazy, but spot is definitely accumulating in this range, which is good to see. But of course, price action is going to tell the story, so let's wait to see how price does play out, especially up into these single prints. I really want to see how this reacts. Assuming we reject here, are we going to be able to hold the value area high of the day into support, right? If we can just start flipping all of these value area highs, potentially, you know, this point of control back into support, then I'm going to really like that. On the charts, let's see if we can maintain those higher lows, higher highs. And then the main thing we got to watch, can Bitcoin reclaim the range? The range right now, as far as my charts are showing, is at around 56,160. So if we can reclaim that price level, if unemployment shows that it's going down in 3 days and we do get that data, and we do see shorts continuing to stack onto price as price starts coming up here, and we do fulfill this CME gap, then I'm going to be in the belief that we can actually start flipping all of this stuff back into support and go for that all-time high once again, that up thrust after distribution that has been my base case this whole time. I do think that's still on the cards for sure, but let's just be cautious. You know, there's a bunch of different scenarios here, so which one will play out, it's kind of an unknown, but I do think we don't have to be panic selling the lows because no matter what, we should see retraces here. But enough of Bitcoin. Let's jump into why this actually happened. So I've been talking about unemployment a lot. Let's go ahead and look at that unemployment chart, and let's give you some more hopium on what could potentially give us some signs that unemployment isn't actually as bad as the market's thinking right now. And that is because we historically have been lower than ever when it does come to unemployment rate. Unemployment rate has been the lowest it's been since all the way back in 1968. So the fact that we are coming up here could just be expected, right, to bring us back to the mean. We are still not even at the same levels as the low end range that we were in 2007. And what I have marked out on the chart here, this dashed line, this is when the recession actually started back in 2007. It really started in November, October, and that is when we broke through this level. So if we do see unemployment come up to 4.7%, right, and break through this, then yes, I think at that point a recession is pretty much guaranteed. But depending on what happens here, let's say we reject off this EMA, right? Let's say we just roll over here and then we come up to break this, because I do think, pretty much inevitably we're going to have this recession. But I do think a couple more months of good employment data could be in the cards and could mean that markets get this big spike up, because you're seeing a lot of shorts opening, you're seeing a lot of panic selling, you're seeing a lot of people call for a recession. Normally that kind of stuff marks lows in the market, and while it might be a temporary low, we're not quite at this critical level of 2007 yet. I know historically we look at 2000 and we were at around the same level as right now, so we have seen recessions starting at 4.3%. It's still bad. The spike up does not look good. This is a very worrying thing on the charts. But just to give you some hopium, there is nothing to say we have to see a recession start right now, and there is definitely the chance we could delay this for quite some time until we have to worry maybe in a couple months from now, something like that. I do believe they're still going to try to keep markets elevated until election season, so we could still see that top come in anywhere from September to October, November, something like that. Still makes a lot of sense in my opinion. But of course, unemployment isn't everything, and the recessionary indicator known as the SOM rule actually has predicted recessions much more accurately, and we are at a critical level on here. So I'm not saying that this is by any means good. This is actually through critical levels right now at points where we have seen recessions being imminent, but we could see, if unemployment comes down, we could see this dip back down, give us just a little bit more time before the true recession does start. So let's wait for new data to come out. This is extremely pertinent stuff. This is the reason the markets are collapsing. There's a bunch of different catalysts out there that people are saying, World War III, Civil War, Kamala Harris is going to be president, Japan is collapsing. There's a bunch of FUD, but the main thing that I think is affecting markets is definitely the SOM rule has crossed into critical levels that have historically signaled a recession at a 90% accuracy, and this is something we need to keep our eye on for sure. But enough of the unemployment data and the SOM rule. Let's go ahead and actually talk about the stock market now, and then we'll finish off the altcoins at the end. Starting off with the Russell 2K, we did see this rip all the way back down into this previous range. This is not something we wanted to see. Once again, does not look good at all. After swing failing these highs, this is something we did not want to see happen. Now that we are back within this range, unless we can flip the value area high back to support and get back up here, I do think this is something that is very worrying and we need to watch out for. But certainly do expect a bit of a retrace here. Certainly not time to panic sell. I do expect worst case scenario this is going to play out. So far, I like the nice wick we have to the downside and reclaim of these points of control. So as long as we can kind of hold this as support and show strength here, potentially getting back above value area high, that could be a very good sign for markets. Not quite enough data on this to tell us what's going to happen. So we'll just watch this over the next couple of weeks to see how the Russell is going to react, because this is going to be a big indication of how Bitcoin and especially your altcoin market will do, because this is more risk on assets compared to the S&P, which is more of safe haven assets, but this is also tanking as well. We have definitely started a scary trend on the weekly time frame, monthly time frame. We've been talking about this parabola. Let me actually go to the TVC markets now. You can see this is the parabola since 1964 that we have been creating, and why I've been screaming a depression is going to happen at some point in the near future, because these parabolas don't last forever. And is there a chance that the parabola is done for, and this is what we can expect to happen next? And yeah, it's possible. It's certainly possible. And we might be entering World War III in the end of civilization as we know it. But once again, we got some hopium on the shorter term time frame. So if we jump back in here to, let's just say, the 4 hour, or actually daily, we'll go ahead and talk about the swing failure pattern that we had. I love my swing failure patterns, and we got a very nice one of this previous low right here. This was certainly an important level to hold, and we did break it, but we swung fail it, which is very nice to see, bouncing off that daily 200 EMA pixel perfect. And this once again definitely signals a momentary rally to the upside at a minimum, and I still think another all-time high here is very possible, right? There's going to be a lot of liquidity sitting up here, so we swung fail the low end of the range. Could we go ahead and do a little bit of a range play to swing fail the high end of the range before finally coming down here? And this is where your range does in fact break. I think this is very likely for the S&P to take out those short positions, because once again, there's just a lot of shorts being opened in the market right now. So we'll see how this does play out. But on these shorter term time frames, yes, I do think the S&P is definitely bottomed for at least a retrace to the upside, and I would expect to at least come back up and fill some of these gaps we have to the upside. We have made a new gap on the S&P as well, so I guess your worst case scenario is not super bullish, right? Because that gap's right above us. If we come up here and reject this, that's not giving us too much hope for the markets, but definitely do expect probably going to get through that, probably going to at least test this gap, potentially come all the way up here and swing fail that all-time high. This is still kind of what I'm thinking is going to happen, because there's just so many people calling for a recession right now. There's so much fear in the markets. I definitely would not be surprised to see a rip up to the upside, a nice short squeeze before that final top does come in. And then let's finish off here with the altcoin market. We touched on this at the beginning of the video, how we have certainly deviated prior cycles at this point, and right now we are just looking to see, is this swing failure going to hold? So we got a nice sweep of liquidity here is what we're seeing across the board. Big sweep structures on the charts, and this is going to be huge to watch. Can we actually hold this as support now, or is this going to roll over? We need to get back above this. We need to hunt back up, and then this is the big question: can we actually flip this into support, or is this going to fail as resistance? And I think both scenarios are equally likely at this point. I do think at this point you're not just going to keep getting sweeps to the sweeps. This is more structurally bearish at this point, but we do have what you would consider a bull flag actually. So, for all my pattern guys out there, this is some hopium for you there. We got a nice bullish pattern potentially here on the charts. Let me actually do a parallel channel, because that's what you're supposed to use for these. Let me go ahead and pull this for you. You can see, kind of arbitrary on where you want to pull these lines from. I think that works out pretty decently. And with this pattern, you would expect potentially a breakout to the upside. So we'll watch this. We'll keep this channel on the chart, see how it does play out here on total 3. Bitcoin also has this channel. I should have mentioned that as well. Let me go ahead and actually get to a cleaner chart here, because I know I have a ton of levels on that one. So let's go back out here to the daily time frame, and let's talk about this channel that we got going on. I'm not a big pattern guy, but when I do see them on the charts, I do think they're worth drawing out, just so you can see, what retail is going to be thinking, especially, this will actually show you trend as well. So this does show you levels that we want to get back above, and this definitely could be a fake break to the downside, right? This could be just a shakeout, and we could get back above and go ahead and either hunt for mid-channel trend, topside trend. That's not going to happen, right? If we go ahead and hunt for the topside trend, at this point, this is where you're going to get that fake breakout and back test, and then roll over. And this is still my base case, right? This is kind of what I think is going to happen. But I will say, definitely with what unemployment's doing, with what price action is doing, with these new lows on the chart, we could be flipping a little bit more bearish. I'm open to the idea that we could just, partially fill CME and then bye-bye. But I'm going to be still holding my bullish scenario and holding my bags tight. I got some nice diamond hands, so I'm not too worried about it. I'm unfazed by this dump, so I'll just be waiting to see how price does play out here. Worst case scenario, just off this chart, or just off this pattern, is going to be definitely this back test of the trend, which we are trying to test right now. So if you want to look at shorter term time frame stuff, let's see how this reacts. We're really pixel touching this channel right now. If we can get through this and actually accept back above, I think that's going to be very bullish for us, and I do fully expect that to happen, to go ahead and at least fill the CME gap partially, or go for the all-time highs. When it comes to the altcoin market, we'll finish off here in saying that my targets also remain the same. If I do believe we're going to all-time highs on Bitcoin, I do believe all-time highs here are possible as well, but many of your altcoins are dead. I will give you that. If you're in an altcoin that's in its bear market range, you're probably not making an all-time high once again, but I do think many altcoins are going to make all-time highs. Absolutely. You look at something like Caspa, like Octaspace, while I do think structurally, yeah, they look topped, there is definitely the chance that we could go up here and actually make a new high on this. I don't know if we're going to get all the way up here to value area high, but we did have the point of control sitting right above these highs. So potentially just, once again, prices like to be swing fail and stuff. I do think a swing failure of these highs makes a lot of sense before we do finally enter the bear market, and this would shake out the most amount of people that are short selling right now and get the bears to flip back into bulls, which is normally what happens right before you actually have the recessions play out. So yeah, those are my thoughts and TA on the markets right now. I'm still a bull. I'm still holding. I'm unfazed by this. But certainly, if you think you're over leveraged in the markets, if you think you messed up and you need to take some off the table, potentially you could do that. Just wait for retraces, right? Never a good idea to panic sell the lows. Potentially we could find resistance in the CME gap. Just let price play out. The charts will tell you the story if we are actually truly bearish or if this is just going to be a big fake out to the downside. Economic data is truly bad though. This is unlike 2022, 2023 when everyone was super bearish, but we didn't actually have the data to back that up. Now people are getting super bearish, but there's definitely reason to be bearish. We have really bad economic data with some potentially really bad geopolitical factors, and we could actually be seeing the end of the world as we know it. But of course, it's all just probabilities. The math is the math. So let's see what the charts tell us day by day, and I'll keep you guys updated. And if you do have any questions about anything I talked about today or just want to join the community for this channel, link to my Discord is at the top of the description down below. Below that is a VIP Discord specifically for leveraged trading, and I now have a new exchange partner, BitUnex. I think they're the best non-KYC exchange, so really excited to have them on board. Make sure to go ahead and sign up using my link down below and check out some of the other exchange links as well. They all offer their own perks, especially if you can KYC. I got a limited time event going on with BingX right now, so go ahead, check that stuff out. But with that being said, thank you all so much for watching, and I'll see you all in the next video.